Good morning, everybody. Too many switches. Apologize for that. Hope your evening went well. As usual, the rain went west, south, and east of us. We have rain in the forecast for the next 4 days. Sure hope we catch some of it. We need it. But they've gotten some much-needed rain out west. It's not going to help the wheat crop for most farmers right now. So that will, as we've been talking about, add to inflation as far as the grains go, which is a basic input, livestock and people. Also, the forage, the grass, etc., is really hurting here. They have done their first cutting early this year, and they're hoping for moisture, so they've got some of it, keep it growing all over the summer. My guess is a lot of hard red winter wheat will be grazed by cattle in the Texas, Oklahoma Panhandle, western Kansas, eastern Colorado, and western Nebraska to get something out of it. So it is pre-Memorial Day. That tends to bring decreasing activity as the day progresses. So you get a flurry early, then as the day, as you approach lunch, it starts to slow down. Those that can leave over lunch and start the long weekend early, and a lot of people like to do that in Chicago and New York and the major cities, beat the major traffic jams, etc. They'll do it. So I expect things to start quieting down and really get quiet after lunch. All markets trade regular hours except for financials. They'll close an hour early. They'll close at 3:15. Central 4:15 with the stock indexes. So here we are. You know, Fitz, they're all interrelated. All these contracts impact each other. There's a good article on well, actually, there's two of them on Zero Hedge. One, palladium gold, to show you how that's interrelated, and the other one is interest rates and energy costs. So they're all kind of tied together. Y'all stir them into that basket. The grain futures are really limited to about 5 months of activity per year, and they huge swings on weather forecasts. And those can change daily in the spring and early summer in grain growing countries. So they're really fun to trade from a long-term perspective, but you can't pay a lot of attention to what goes on every other day in the grains. They're built that way. Okay, we have got really good support at 20 to 16 yesterday. The option strike price that was defended by the market was 125.16 and 126 even. So I expect the market to close inside of that. First resistance is going to be 24. I'd like to get the trade done at the upper end of the range. We're looking at a P right here. We've got volume above yesterday's. We've got this high up at 28. So we're going to start out trying to sell 27s to 31s. And then 3 to 7, but it may take 24, 25 to get off a short. It's pretty quiet, and we don't have much range to work with. On the buy side, 21s to 17, basically where we've been for the last week, and then 9 to 13. News today: new home sales, 420K. And they'll be looking to see where those new home sales are done. That's going to be the piece of information they'll try to glean from that. And if they see new home sales picking up broadly around the nation, the country, that's better than having them focus like in a couple of 3 states. It's amazing. I think last year more homes were built in Houston, new homes were built in Houston than were built in the whole state of California. So if most of the action is in Texas, North Dakota, that will be heavily discounted. If they see a pickup in new home sales in California, Florida, places like that, it will be taken as an indicator of improving economic conditions in the real estate market. So that's it for the note. It may take, like I said, you've got that high volume number at 25. It may take a 25 to get off ashore, but we're going to try for higher prices. Disappoint the put holders, run it away from them, freeze the call holders in their positions, take it up to 126, and then take it back and close this baby at 125.24, which is where the prediction we made for yesterday and today's close. Yesterday's close was at 20, so we missed a little bit on that, and we'll see how well we do at 24 again today. But that's the math of options expiration. Okay, looking at the 30-year, the math is 136 to 137. And the knob spread came in a little last night, but it's probably going to go out around 11 today. So we got pretty good buying in the knob spread in the 28 to 30 area. We got pretty good selling in the 3 to 4. And so I would guess that would close about 11. Got this kind of little dishing out, but you can see volume is holding in this 2022 area. Last rotate up yesterday was basically the buck at 137. We have yesterday's high at 27. We're at 22. So this market is pointed higher. We've got a P. So let's try 27s to 31s for sell 1. 3 to 7 for sell 2. This is based on a knob spread basically at 11. And probably strengthening a little bit this morning. And we like our 13 to 17. And then 5 to 9 on the buy side. Okay, gold was pretty quiet last night. Not a lot going on. It's been stuck in a range, and it's not breaking out right now. Biggest action last week was somebody dumped paper value of $520 million at the market. Took gold down $7 an ounce. So there's, again, this 85 area is really, really, really good support. And 1305 is resistance right up here. So this is the market that we're looking at, and we're right in the middle. So let's buy one's going to be 88 to 90. Buy two's going to be 85 plus or minus. Sell one, it's coming down, so we'll make 95, 97, sell one. And then 1300, 1303, sell two. Don't see anything that can shake this up. It's a pre-holiday market. 95 to 97 is pretty damn aggressive, but it may be the first rotation, first shot we have at it. Okay, the euro was again hit in the overnight. Mario Draghi has to be smiling from ear to ear. And again, we do like the short side of the euro longer term. I know I sound like a broken record all year long, but the European Central Bank needs to lower the euro to export more. It's hard to fight the European Central Bank or any central bank. And I think the economics in Europe are soft enough that we just really can't anticipate a lot of growth. So London, basically 50. So our 45 to 55 will be sell 1. Last rotate up yesterday stopped at 60, so 60 to 70 will be sell 2. On the buy side, I think we went out last night wanting to buy 25s to 35s and 36 to 10. We didn't quite make it to 10. So we'll make 5 to 15 buy 1 and 90 to the buck for buy 2. And look for pretty quiet trading in the euro too. With a down bias. Okay, crude was on hold. It is the start of driving season. Driving season officially is Memorial Day through July 4th. And then after that, it kind of, they start thinking about increased distillate, less gasoline on the crack spreads. So they turn the refineries around, getting them ready for winter. Natural gas has replaced much of the demand for heating oil. There's still some of it, but nowhere near like it used to be. So diesel is actually a transportation fuel these days, but that won't stop people about buy heating oil for the winter. Okay, we got pretty good resistance at 25. The market is holding volume. It looks like it's going to trade up, so we'll make 25 to get the mouse to work. 50 sell 1, and then 75 to the buck for sell 2. I think we're headed for stops above 105 the way the market's acting and holding the gains. And 25, and let's see, 50 to 70 for buy 1. That is really, really aggressive. Then we'll make it the buck to 25 for buy 2. I sure wouldn't have a resting limit order at 60. I'd wait for my setup before I put that trade on. Some signs of selling. Okay, to the E-mini. The tendency on holidays, the session into the holiday is for sideways to higher prices. The E-mini is poised and is pointed towards 1900 plus. One analyst who's been bullish all year long said selling won't start till the third quarter. It gives us the whole month of June. He's looking for 1950. It's probably the most optimistic forecast. Everybody and their mother have been looking for 1900 since January of this year, has been the call. So right here is our 1900. We've got resistance at 93.95. Sell failure to take that out. Although I don't think they're going to have any trouble taking it out. And then 99 to 01 for sell 2. I do expect an unchanged to higher close for today. So our bias is to the upside. There is support at, you got this D ledge right here at 87.50. You've got the overnight low. So this 88 to 90 area. It's aggressive as can be, but that's what they've made us pay up. Every time getting into the market, then we'll go 85, 83. We might have a chance to buy cheap. They'll head fake, take it lower off the opening. Then suck people into the short side. Nah, they wouldn't do that. and then take it up. But my guess is we're going to close this thing unchanged to higher when it's all said and done. The 88 to 90 is very, very aggressive. 83, 85 is a pretty comfortable long. Okay, it'll take at least 20 minutes to get everything up. I'm going to get busy on that. In the interim, good trading.